yeah, the dollar is going to be toast. And I think that's why there's so much buildup of tension right now between the West under the US leadership and the rest of the world, the BRICS world.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for December 27th, 2022 through January 3rd, 2023 while supplies last. This week we feature 2022 silver kangaroos at just $4.25 over spot. Made by the famed Perth Mint, these 2022 silver kangaroos are, along with silver maples, one of the only silver sovereign coins in the world minted at 4/9 fine purity. On one side, they bear the portrait of Queen Elizabeth II, while on the other, they feature the eponymous kangaroo. They come $25 to a tube and just $250 to a box, and at only $4.25 over spot, they're the most affordable box around. And finally, they are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and back with us today is our good friend Mario Innecco, from the very popular Innecco64 YouTube channel. Mario, thank you so much for joining us today.
Well, you're welcome, and thanks for having me again, Elijah. I always enjoy speaking with you.
Well, it's great to have you. And the first topic I did want to discuss today is central banks buying gold and what we've seen this year. I know it's been record buying, and what this may signal for kind of people have been talking about the BRICS countries developing a new reserve currency that might be gold-backed. Could we get an update from you on what you're seeing right now and the significance of central banks buying gold?
Yes, I actually spoke earlier today in my daily video about it because this article came out in the FT saying that November had been a huge buying month, like 700 tons. And prior to that, the third quarter was big, but it was like 400 tons. So in 1 month, they did more than they did in the third quarter. And this was reported by the World Gold Council. And the speculation, of course, is that China and Russia are now buying a lot of gold. And I think the Russians, they're probably the second biggest producer, one of the top producers of gold. And they've been blocked out of the Western market and the LBMA. So I think the speculation is that they're selling direct to the Chinese now as well, and the BRICS countries as well. They're buying gold, and it's I think the biggest buying by central banks since 1967, which was like almost the end of the London gold pool, which was like a covert group of central banks from Western Europe and North America and Australia. They're trying to keep the price at $35 an ounce back then. And then the French gave up and they said, well, there's too many, the Americans are printing too many dollars. We want our gold. We're going to redeem it. And that London gold pool collapsed in 1968. And that eventually led to the end of the original Bretton Woods system on August 15th, 1971. So it's very significant what's happening now, I think, because I think the BRICS countries under the leadership of Russia and China are breaking away from the old dollar system that's been around since 1944. I know Nixon closed the gold win in 71, but the dollar is still the major reserve currency. And yeah, it's very significant, I think.
No, it seems like we are possibly going to see like a new Bretton Woods. Last time with the original Bretton Woods, the dollar was on top, the U.S. was on top. How is this shift going to impact people living in the U.S. and also people in the West as well, for example, in Europe where you are?
Yes, and this new Bretton Woods, if we have it, it could be just the BRICS countries meeting, because don't forget the Bretton Woods in 1944, it wasn't all the countries of the world that met then. So how it impacts the United States domestically and the other Western countries, whose currencies are really pegged to the dollar, well, it means that there will be less demand for dollars. So less demand for dollars means that countries like China and other countries in the BRICS and global South, as they call it, will have to hold less dollar reserves, and they'll be buying less treasuries. And that means that bond yields are probably going to rise because there's not going to be that demand for the dollar, and it's going to sift through to the euro, to the British pound, to the Canadian dollar, to the Australian dollar, all the Western currencies. And we saw recently as well that China and Saudi Arabia and the Gulf cooperation countries did a deal, a 3 to 5 year deal for China to buy their oil and gas, and for them to get payment in yuan, or the petro yuan. So that's highly significant, I think, as well. So all it will mean, if there's less demand for dollars, dollars are going to become worth less. And when the currency becomes worth less, it buys less. So that means higher prices, a lower standard of living. But I think there's a silver lining. The silver lining is that we're going to have to learn in the West again, especially in the US, that we have to earn our way in the world, because the US has been able to just print dollars out of thin air and buy whatever they want from whatever country they want. But I think that's coming to an end. So it will mean, I think, a more honest system. But it will feel painful, because I think a lot of people are not aware that this is going on. There's so many distractions in the world, as you know.
A lot of people aren't also aware that most of the dollars in existence are actually held outside the US. So if we do see a decrease in demand for dollars and dollars coming back to the US, that just increases the money supply, which will just make inflation worse. Your perspective on that?
Yeah, physical dollars. I think, like in Russia, they used to hold a lot of physical dollars under the mattress. In countries like Venezuela, Argentina, Brazil, all throughout South America, that will impact as well on inflation. But apart from just physical dollar notes, the fact that interest rates are probably going to stay elevated, because there won't be as much buying of bonds as well. That's going to keep financing costs high. That's probably going to increase the U.S. government's financing costs. Like every year, they have to renew old debt that matures. How do they do that? They don't pay it off. Well, they pay it off by issuing more debt, and it's going to keep costing more. So it's a vicious circle instead of a virtuous circle that we've had for about 40 years, where the Uncle Sam didn't have to worry about the debt because foreigners were captive buyers. But I'm not saying foreigners are going to stop buying treasuries outright, but I think there will be a huge decrease of the amount of treasuries they will need. And we've seen already this year, even Japan has lowered its treasury reserves from 1.3 trillion to just over a trillion. China as well is now below, I think, approaching 900 billion from above, above 1.1 trillion at the beginning of the year. You can find that data at the U.S. Treasury website. It's called the TIC, the TIC data.
Now, what about central bank digital currencies? Because we're hearing a lot about this as well, and many people out there are saying, well, that's the future, right? Whether it's good or bad. We're hearing in the U.S. that they're rolling out the digital dollar. It's already being tested right now. So does that play a role in this at all? Or is it just that countries are going to move towards a sound money system?
Yeah, it's difficult to say whether this CBDC move is more just of a technological thing for among central banks to pay each other and banks, or if they really want to use it as well to keep track of what we do. And I know people are worried about that, and I think that is a worry. But I think we need to be a little less fearful about CBDC. But it's something that could also run parallel to the system we have now of paper money. And also we have a digital system right now, wiring money and debit cards and prepaid cards or credit cards. So it could be a technological thing. And actually today I saw a story that came out, someone sent to me. It's Sberbank is the biggest bank in Russia, commercial private bank. They've developed a blockchain currency backed by gold. So in that sense, that would be a good thing if the Russians eventually had a gold-backed CBDC. I think that would work, but a lot of people think that the CBDCs will come about after a collapse in the West, a collapse of the currencies, and they'll say that CBDC is a solution. But unless the CBDC is backed by something concrete like gold or silver, I think it could work initially, but then it wouldn't last too long. It's a little bit like in France after the French Revolution, they issued the assignats, and that collapsed. That went inflated, was inflated massively and collapsed. And then they brought something else after the assignat called the mandat, and that didn't last very long either. So CBDC, it is a worry, but I think we need to maybe not be so fearful. But again, I think one way to fight a CBDC, the system, is to have monetary assets outside the banking system. And we know what that is, physical gold and silver. And even if we have to use CBDCs, I don't think it would be that different from what we use today digitally. Yes, some people are concerned that they might program it. They might put like a sell-by date for the currency to make you spend quicker if the economy slows down, and vice versa. Who knows? But I think, but there is a lot of talk about CBDCs, I have to admit.
Now, it seems like to me, whether we have a central bank digital currency backed by gold or just a reserve currency from the BRICS backed by gold, the old saying that good money drives out bad money, right? So it seems to me that if any country goes to a gold-backed system, it seems like that's kind of where the game ends, or the game is over at that point, because who will want to hold dollars at that point if there's a gold-backed currency? It seems like that would just be the currency that everyone would want.
Yeah, and I think that's why we're having such tumultuous geopolitical environment right now. This proxy war in the Ukraine, and the fact that it doesn't look like the West. I think the Russians said they're ready to negotiate, but the terms that Ukraine and the West are giving Russia are unacceptable to the Russians. So yes, and I think it's got a lot to do with the BRICS currency, what's going on in terms of the geopolitics, even though we don't hear that in the mainstream media. So you're right. I think I heard someone say years ago, it could have been Jim Sinclair or someone else, that once a country strong enough, like Russia and China, let's say, both together, say we're going to have a gold-backed digital currency, that we can trade through the blockchain, the dollar is going to be toast. And I think that's why there's so much buildup of tension right now between the West under the U.S. leadership and the rest of the world, the BRICS world.
Now, when it comes to how this is going to be impacting the prices of precious metals, what I've heard before is that really for a gold standard today, there's not enough gold out there at current prices. So it seems like precious metals would have to be revalued to be able to have any substantial backing of a currency. Do you agree with that?
Yeah, I think there's always enough gold. And like you said, it depends on the exchange rate, because that's what we have to look at gold as the center of the monetary world. So the currencies, yeah, it just depends on the ratio. And the price will be, in fiat terms, will have to be a lot higher than it is now to let's say, get a 30% backing at least. I think back in the 1900s, under the classical gold standard, the British had like a third backing for their currency in gold, and that worked quite well. I mean, some people would argue they want 100% backing, but I think if you have 30 to 40, that would be enough to keep it going.
And what impact do you think that'll have on the metals prices? Do they have to be multiples of what they are today?
Yeah, I would say so. Yeah, I don't have some people talk about 80,000. I think it was Bill Holter. Some people talk huge numbers. I don't think. I don't think the fiat price. Yeah, it is important right now, but I think what will be important is the purchasing power of a gram of gold or an ounce of gold and silver. I think it will be a lot higher than what it is now. And I guess that will be reflected in the fiat price, even though like in countries like Venezuela and Argentina and Lebanon, the currencies there have dropped so much that you can't even get gold with their currencies. So that's why I think it's important to focus on the purchasing power of gold and silver.
And when it comes to silver, I'm not hearing a lot about silver being used in this new monetary system. If we go to this, do you think silver has any role in the monetary system of the future?
I think it should, really, yeah, because it provides more liquidity. Because if you look back at the 19th century, 1800s, up to World War One, silver and gold were changing hands. They were both currencies, and gold is more of a savings instrument, more for, you could argue, like for your saving wealth preservation and storage, and silver is more of a change currency. So I think, I think it should come back. Whether it will, I don't know, but we've seen that the Indians have been buying a lot of silver, and I think a few years ago, even the Russian central bank bought silver. So I think they have silver, and the Chinese, I think they have a lot of silver, the Chinese people. So who knows? It's possible. You have Mexico as well. They could go on a dual gold and silver standard. I think it would be good because, as I said, it provides more options, not just gold, but also silver.
And speaking of that optionality, the central banks that are accumulating gold right now do have more more soundness, right, than those that don't. You mentioned in a recent video that central banks can actually use gold to reliquify their balance sheets. Can you expand on that and kind of the power that gold gives central banks?
Yeah, I think it was one of the central bankers in Europe a few weeks ago or months, the head of the Dutch central bank. He was doing an interview on TV over there, and the central bank's balance sheets now are underwater because all the bond prices are dropping, and they did a lot of QE, and they have very thin amount of capital. And this guy, I think his name is Knot, Knot. He said we could always use gold to reliquify our balance sheet because a lot of central banks have gold, and how would they do that? Well, I think they would instruct the bullion banks, which really are agents of the central banks, to close their paper shorts, and that would drive the price up, and it would revalue their balance sheet. And with the environment in the bond market and the way I see it, it's very possible to happen in the future. I think in 1980, when gold went almost up to 900, the Fed's balance sheet was backed by over 100%, like 125% by gold. So that, the market did that when gold went from 400, like in the beginning of the of 1979, to 870 or 887 in January 1980. So yeah, the market could do it, or they could. I don't think they would do it officially, because gold, that would imply that gold is now running things. They would probably let the market do it. They would, as I said, bullion banks would cover their paper shorts, which are huge, as we know, and that would catapult the price higher. And then they would just probably say, oh, gold is now going to be in a band, and they will sell, at a certain price and buy at a certain price and keep it there.
Now, when it comes to central bank credibility, it seems like that in this new system, well, in the current system we're in, all the markets are looking at what the Fed says. Powell speaks and the market moves, right? In this new system, do you see the Fed, the U.S. central bank, really having much importance? If the really important currency is really what the BRICS nations have, because it's gold backed. Do you see the Fed having much credibility or importance in that new system?
Well, I don't think they have credibility right now, but because I actually think the Fed's been behind the curve. But yeah, it will depend how the Fed and the Western central banks react to a potential BRICS gold-backed currency. But yes, in a gold-backed system, the central bank is there just to facilitate, I would say, payments amongst nations. If you have a surplus one year, you will send, let's say, paper you want to Moscow, and then the Russian central bank will send the Chinese some gold. That's what it's there for. So yeah, whether that will happen in the West, it's difficult to say. Ideally, we should be in a world where if there are to be central banks, they're just like depositories of currency and gold. And then the market, individuals in the market decide what the price of credit is by either lending their gold, which means putting your gold with a bank, or withdrawing it, and that changes interest rates. So yeah, I think we might go back to that kind of world, because we've had this crazy floating rate currency and fiat currency system for too long. And the flip side of that would be people would actually probably think, oh, this is not a free market system, because currencies are not floating anymore. But if you think about it, currencies and money is just should be a measure of weight of gold and silver. And I think that was a big mistake Milton Friedman made, even though he was a pro-free market guy. He said, oh, currency should float. It's a free market. But I think that's wrong.
Before we let you go, Mario, if we could get your perspective kind of on the shorter term. We've been focusing more on the big picture right now and the system that we're heading into, it looks like. But if we're looking, we're looking at the end of the year coming up in a few days here, and a new year, 2023. What do you anticipate for the precious metals in this coming year?
Yeah, I mean, up until a few months ago, precious metals were disappointing. And I would say, I guess they are still a little bit disappointing, especially if you in the U.S. and your currency is the U.S. dollar. I think gold is pretty much unchanged for the year, which is better than being down like over 30% like the NASDAQ, and better than being down over, I think, almost 30% in the TLT, which is a long-term Treasury ETF as well. And silver, I mean, it's picked up. It's up on the year now, about 3%. And it's been a year where central banks have really been aggressive with their tightening, with QT, especially the Fed. And all those people who said, oh, when interest rates go up, gold and silver are going to collapse. And they've actually stood really firm. So my view is that the Fed and other central banks, yes, they'll probably keep tightening for the next few months, maybe into the spring. But after that, they're going to slow down. So I think that will put wind behind the gold and silver sales. And I think it will be a good year for gold and silver, better than 2022. And I don't think 2022 has been bad, because if you look at all the other assets, they've lost so much. If you've had gold and silver, you can buy a lot of things a lot cheaper. Bitcoin, you can pay 60% less than you did at the beginning of the year, for example. You can buy bonds a lot cheaper as well, and you can buy stocks. Am I saying people should do that? Not necessarily, but I think also the new BRICS setup for their currency is going to be more commodity based. And I think not just gold and silver are going to do well, but commodities are going to continue to do well too.
All right. Well, Mario, we really appreciate all your time today and your insights. Before we let you go, if you'd like to share with our viewers where they can find you online and any last thoughts you had.
Yeah, you can find me on YouTube at Innecco64. I am on Twitter as well. There have been some bots there, just to let people know. I'm at Innecco1964. There was a bot that put an extra N, so be careful. And last thoughts. I think, I've said that to other people I've recently interviewed with, is not to fear things, just to take one day at a time, switch off a little bit or almost completely from the mainstream media, and keep plugging away.
Fantastic. Mario, once again, thank you so much for your time. God bless and Happy New Year.
God bless to you too, Elijah, and Happy New Year.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.